Good morning, guys. Welcome to the market report. Listen, I'm really glad to have you guys here to listen. I got a really important show this morning. Listen, you guys ever had an aha moment? About an hour ago, I was searching through the news and stuff, and I've been trying to find a trigger for this next economic crisis. I think I might have found it. This is important stuff. You guys got to listen. Now, I'm going to get right into the markets first. I'm going to do the markets first, and then I'm going to talk about the stuff that I found out about this morning. So let's get started right now, and let's open up the charts, and let's get right into the markets and find out what the markets are doing. First thing we're going to take a look at is crypto, but we're not going to stay on it long. We just want to point out that it hasn't had much movement, except it's holding its own up around $133 billion market cap, more or less, with Bitcoin dominance of 51.6%. We've seen dramatic increases in some of the prices of these coins. Litecoin is doing really well, $56.16. And I'm going to point out one other thing here, that another good coin that I'm very interested in, and they're making a lot of progress, is Dash. They're at $83.22 right now, which is really low price for Dash, and I'm looking very seriously at maybe picking up a couple Dash, because Dash is it's one of your underdog coins, and Litecoin, has been an underdog coin for a long time. I can see these coins are fighting for position. I can see Ethereum actually moving down on the list, and I can see it making way for XRP, EOS, and Litecoin. To move up a notch, possibly. Now, that's one of the things I see. But let me point out something else here. Bitcoin is at 38.47 this morning, and Bitcoin has been holding strong. If we go back and we take a look here, we take a look that she did have a dip, but she's been holding strong at this price, around $3,800. Now, let's take a look at silver. What's silver doing? Silver had a flash crash right here in the middle of the night, I guess, or a while ago, this morning earlier, but it had a flash crash. It went down into the $14, went down below $15 into like the $14.95, and then it zoomed right back up again. A quick little flash crash, and I'm not exactly sure what caused that, but silver has not been doing real well lately. It's at 15.03 this morning. It's down a penny. Gold, let's take a look at gold. Gold had a little flash crash too, exactly the same time. And they're manipulating the market. That's what caused this flash crash. They've been manipulating the market all along. This market is under so much manipulation, it's not even funny. They're able to use the paper short contracts to manipulate the price where they want it and keep it there using paper. There's outstanding paper, like on silver, it's like 100 to 1. So for every ounce of real physical silver you have, they use like 100 ounces of the paper stuff, paper short contracts, to manipulate the price where they want it to be. So basically, they set the price on gold and silver. They could knock it down to zero, but they know better. Because if they knock it down the cost of mining production, below the cost of mining production, they know that there will be a slump in mining activity, and they know that that will lead to a shortage, and then the game will be up. So they do have limitations in what they're doing. This is why you see them not dropping it below, like, say, probably the mining production costs overall to get it into coin form. Now, some of these mines are able to mine silver out of the ground. If they have a really low cost of production, they're able to get it into basically it's a glob of smelted silver, but they can do it for like $5 or $6, some of these companies. Some of the better ones, they're able to get it out real cheap. But most of these companies, it costs about $10 to get it into that form. Then later they have to do more and more production, more and more refining to get it into a coin form. By the time they get it into a coin, an actual coin that's sellable to you guys, or coin and bar, by that time it costs them probably 11 or 12 bucks, or some companies 14 even, if they got a higher cost of production. So they can't drop it below those prices. They have to leave a small margin And they know that. That's why they've been keeping the price of silver up around $15 more or less. But they're keeping it right down close so the miners only have a very thin line of actual profit. Their profit margins are very, very small. They keep it right down close like that. But just enough where they keep the miners going. And they know that. They're good at manipulating it just to where they can keep it down at these low prices. So there's the profit ratio for the miners is still there, but it's small. Anyway, gold, $12.85 this morning. It's down 90 cents. Okay, so it's not doing good. Gold and silver's not doing good either. What we're going to move on and take a look at here is the oil price. Oil price is at $56.81. It's up 59 cents on the day. Okay? So oil prices are going up a little bit, and they've been going up ever since OPEC has been managing to keep that price moving up. And that's what OPEC's interested in right now, is to keep that price moving up. This is why there's empty oil tankers on the Atlantic and on the oceans of the earth, the Indian Ocean. There's a dozen giant. I mean, these tankers, unbelievable how much oil they can carry. They're empty. You know, there's a dozen empty ones on the ocean right now. Sailing on the ocean, empty. Pre-market data today for the Dow Jones Industrial Average. And what we're looking at, we're down 72 points in the pre-market right now. And we're looking at 25,673 right now in the pre-market. Actually, no, that was the close. In the pre-market right now, we're looking at 25,594, down 72 points. The stock market's starting to roll over a little bit. We had that bounce in the stock market. We had a tremendous amount of buybacks, corporate buybacks, buying their own stock. But they can't do that forever. That's kind of a one-time trick, A corporation comes in, buys its own stock. I mean, once they've done it, they've kind of, they have to, it's like anything. It comes to an end in the end, and then there's no more corporations doing it, and then what? Then what's the next dog and pony trick for the stock market? How they're going to maintain these exorbitantly high levels, Anyway, so we're going to have to keep our eye on the stock market. It started to roll over before. I think it's going to start to roll over again, but this time it's rolling over a little bit slower at first. It could pick up momentum very quickly. Let's take a look now at the bond market. The bond market, we see falling yields. This is a sign. Investors right now are pouring in to U.S. Treasuries because U.S. Treasuries seem to be the safest asset, seems to be the most stable place for the money to go. It's the biggest game in town is the U.S. dollar. Let's not forget that. Right now, the dollar is the best of a whole bunch of bad currencies. You take a basket of currencies, and which one looks best to you? The dollar. The dollar looks the best right now. And the U.S. economy is chugging along, and the dollar looks the best. So that's what they're buying into, U.S. Treasuries, and they're keeping these yields down. Today we got falling yields, all except for the short end of the curve. We're looking at U.S. 10-year at 2.68%, U.S. 5-year at 2.48%, and the U.S. 30-year at 3.06%. Short end of the curve, the yields rising 2.47 on the 3-month. Okay, so anyway, let's move on now to the U.S. dollar index. And we're finding the U.S. dollar at 96.90. Now, I'm going to talk about what's going on right now. We got the market stuff out of the way. Now I'm going to talk about what's going on, what I've discovered and what I've seen looking into things. Great Britain. Okay? Germany and Great Britain. There's a lot of commerce, in the world. Here's the thing. This whole thing about the The misery that Great Britain has been going through for the last number of months, deliberating over. We got Theresa May running back and forth to the European Union to meet with Brussels, and Brussels don't give her any better deal, and that's the deal you got. Go. Basically, they say, go. We're not giving you any better deal, And there's this looming dark clouds of uncertainty over the Brexit, And this is very slowly dragging the British economy down into a recession. Now, if they were to go ahead and say, okay, we're going to have a hard Brexit, get it over with in a few more days, bang, right? They're going to be able to vote for that. The politicians in Parliament, the United Kingdom Parliament, are going to be able to vote for a hard Brexit. Do you really believe that they're going to say, yes, we want that? No, they've been frightened away from it. They're scared to death of it. But it's just like if you had some sort of a bad thing that needs an operation, the operation's not going to be any fun, and so you avoid it. You say, oh, I'm going to postpone it. I'll postpone the operation for 3 more months because I know it's going to be painful. But whatever it is festering and growing or whatever, maybe it's a cancer or a tumor or whatever, that avoiding it for another 3 more months is not going to help the matters. Because what's happening is in the United Kingdom, this uncertainty over Brexit is heading them toward a recession. And GDP shrank by 0.4% in December. They're heading headfirst toward a recession. But so's Germany. And if they vote to extend this thing for another 3 more months, the United Kingdom's going to go into a recession. I'm almost certain of it. And so is Germany. Well, Canada's ready to go into a recession. Can you see the way this is going, folks? This is the trigger. Britain's uncertainty over the Brexit, if it lasts much longer, it's going to lead the world into a recession. Because China is undergoing a massive slowdown right now. In China, we're looking at them saying they have 6.1% GDP. Well, they were saying 7 or whatever percent GDP. Now it's 6.1%. What do you think is going to happen when the rest of the world starts to fall into a recession? It doesn't matter that they inflate their numbers. China, I should say. It doesn't matter that they inflate their numbers to 6.1%. China says that they have 6.1% growth. That's inflated. It's really, probably the real numbers is about 2%. I'm being serious. Right? Now, they're going to have to readjust that downwards if the rest of the world goes into a recession, probably down to about 4%. But it's inflated. It's inflated by about 4%. It's going to bring China right down to where there's no growth left in China. So this enormous slowdown in the Chinese economy adds more to this global recession. This global recession's getting started, and the leader into it is the uncertainty over the Brexit. So what are they going to do in the British Parliament? What do you think they're going to do? What do you guys think they're going to do? Are they going to vote for a hard Brexit? They're scared to death of it. So the Parliament's probably going to say, no, we don't want a hard Brexit. They're probably going to vote to extend it for 3 more months. That's just what we need to have 1 more quarter. We need 2 quarters of negative economic growth in Great Britain for a recession. That extra 3 months is exactly what we need to throw Great Britain into a recession. Great Britain goes into a recession, and then what you're going to see is you're going to see Germany go into a recession. You're going to see Canada go into a recession all about the same time. Around 4 months from now, you're going to see the worldwide recession begin. That worldwide recession is like a domino that's going to lead to Italy falling. Right? And then we got the resentment with all the people in the European Union against their governments. Suddenly, the whole world is in a recession. Europe is in an extremely, extremely bad recession because they're practically all in a recession right now. Italy's just fell into a recession. So this congeals itself, along with the discontentment of the people in Europe, Italy falling into a debt crisis that's unimaginable in its proportions of how it's going to spread through the general economic system of the European Union, and at the same time, a fragmenting of the European Union, all happening simultaneously in about 4 months from now. Dark storm clouds are really starting to brew, guys. And we are in such a situation like we've never been in before. Listen, thank you guys for listening to my show. Most people can't see this coming. It's going to catch most people blindsided because they don't see it coming. I'm going to say gold and silver, super cheap right now, as far as I'm concerned. They've manipulated these markets downwards. They've got such downward pressure on it. It's unbelievable. They're keeping it just above mining production costs. Honest to gosh, guys. We're living in awful turbulent times. Thank you guys for listening. Like and subscribe. We'll keep you up to date on what's going on. Bye-bye, guys.